Well, it's 8:35. Did we find Tricky Nicky yet? We're going to have Nic Chahine on. He's an option expert. He joins us every Tuesday to discuss this week's options outlook. Marketfy Maven and the author of Create Income with Option Spreads. We'll start out with Priceline because Ubi
Good
has.
morning, folks.
Hey Nick, how you doing on this Tuesday morning? Synthetic Wednesday. You know why I call it Synthetic Wednesday?
I missed it. Why?
Because we don't have work on Friday.
Oh, okay. Well, that makes
That's
no sense,
that's
but
his
I'll go with
attempt.
it.
That's his attempt at a joke here to make you laugh, but he got crickets from everyone on that one.
Yeah, crickets on this end, too.
Are you doing okay,
Um,
Nick? You sound a little tired today. Are you doing all right?
I'm doing fine. No, I got a frog in my throat.
Okay.
I have a tip on Fitbit. You guys are talking about
Ooh.
Fitbit.
Oh.
Oh, yeah. This came from a friend that does not trade, and I think it's a good tip. Don't
Okay.
buy it for your spouse. Do not buy it for your spouse. You will be
That's
in
a
the
good
doghouse for a long
that's a
time.
good point actually. Yeah, that's not a good anniversary present. Get your
No,
wife a
it's worse.
Fitbit.
It's worse. It's worse than a gym membership. So do not get that for your spouse. All right, so that's Fitbit. Okay, Priceline. Yep. Last couple of times we talked about it, I told you I'm avoiding it until I see it. It looks like it wants to go to 1125 or lower. Got to 1125. Yesterday's candle took it much lower than that. So I can't catch it here yet, even though I do like to go long it when it gets hammered, just because for the fact that the markets in general are still vulnerable. I don't believe in the jump today. Why are we jumping when Germany isn't? And yesterday, when Germany was down 3%, in the U.S. pre-open was down much smaller than that. I cautioned against it, and I said we tend to follow Germany, especially when Germany is in the midst of all of this. So the bounce here is in question. Why are we bouncing? Just because they may meet, they being Greek officials and the Eurozone officials, mainly Germany. So at least now that the bulls see some light at the end of the tunnel that they're trying to catch, but I have no reason to start anything long new here because the markets are iffy on several fronts: Greece, China, Iran, and others. So sitting out this week is totally respectable by any trader. So having said that, Priceline has no Priceline specific issues that came up recently. It had, I think, a bad note this week from somebody versus somebody else. They picked Expedia, I think, versus it. So it took a leg down on that. But yeah, I do like to go long it, but I'm patient. I have not engaged in it long yet.
What's the open interest look like this week for it? Have you looked
You
at
know,
it?
yes, I have. Priceline is not very good on the open interest just because the volume in it. So this week looks like it should have support around 1100, but it's not insurmountable. It's not formidable, I should say. So
Yeah.
I can't rely
Holiday
on
week,
it.
short week too.
Yeah, I can't rely on it like Apple would give me better idea of support and resistance just because of the volume in it too. I looked at July monthly, and it looks like the whole band between 1060 and 1100 is at one point or another some form of support, but nothing formidable. So I can't rely on the open interest levels from Priceline. I just rely on my knowledge of the stock movement in it and when I think I can go long it. Now, if I do want to catch it, I will go a credit put spread out in time, but not too far out because of earnings. I don't like to hold full positions into any earning situation. So that's kind of like a catch-22. So I'm patient. What I'm doing these days is what I recommend doing for all my friends and family is book your profits that you set up. You've heard me say I'm doing a lot of credit call spread shorting markets. Well, all of these are paying off big time now. Even though they're out in December, they're out in September, they're out in October, in August, and I sold them for $3. Now I can close them for 20 cents. It's an easy win that pays the bills for the whole year. And what I do, or if I don't want to book it, at least I make it into an iron condor that gives me another 20% leg lower from here. So the markets can drop 20% and I still don't lose money. Hard money, paper money, yes, but so that's the strategy now, and patience. There's no need to start tight shorts or longs that are in danger right here because I have no visibility to what's going to happen with regards to headlines. We have no control over the headlines. The fundamentals are off to the side, so how can you make big bets long term?
How about Alibaba here? Gave back all those gains from the earnings, came back and filled the gap. I mean, it's kind of touch and go here. You think it's going to get a little bit of a rebound here, or going to test that? What was the low on that? 77.77?
Well, it's pretty darn close to here. If eyeball, I can't make a big difference. I think the low is right here on this candle. Was it 5.5? 7? Yes, all sevens. You're right. It was May 5th, I think. And then it took one iffy candle, and then boom, earnings came and gapped higher, and then it repriced it all out almost. I think yesterday completely closed the gap that it had on that last earnings. So ugly chart. I haven't done anything with Alibaba ever since the second allegations of whatever fraud there was going on. So I'm divorced with Alibaba until they clear up some of these issues that are Alibaba specific. And I disagree going long Alibaba with Yahoo, like you guys mentioned earlier. If at least I know what Alibaba does. I have no idea what Yahoo does. So why would I want to bank on Marissa and not somebody who's generating so much cash over there? So anyway, Alibaba, from the open interest, they're also confused. They haven't committed one way or another. And I see that it has definite resistance starting at 84, although there's, could be a magnet between 84 and 85, but if we get to it, it'll be resistive. As far as support, I don't see much, maybe a little bit at 81, which is lower here, right? We are at 81, so some little support exactly where we are, but the risk is to the downside. And if we do pop, open interest shows resistance.
Where do you get all your open interest data there, Nick? Just curious, what system, where do you get all your open interest data from?
Well, every platform provides it. I just, I dump it into a giant Excel sheet of mine that is it's pretty convoluted, and I slice it and dice it the way I know how to
But
slice
you
it.
get it
You're
from
extracting it all.
Thinkorswim? That's where I get mine. Do you get
It
it?
doesn't matter where you get it. It's what you do with it. It's how you look at it. It's all the same. It should be all exactly the same, right?
Right.
Because, or thereabouts. And when you look at it, it's how you interpret it, and that's the secret sauce. People see resistance, other people see support. It's how you interpret it.
I mean,
and how
it's got to be a little bit to do with what's normal too. I mean, for the stock, I mean, you might look at an open interest level, and you can say like, oh, well, there's 5,000 contracts are open. That's huge. But I mean, if it's Apple you're talking about, that might not be huge at all. So it all just depends on. So you track the history of like the open interest on the stocks too, and look, if is this relatively high compared to what it normally is.
Well, no, I track the movement with regards to recent history.
Okay.
So how are they set up yesterday? How are they set up today? What happened overnight? Did they change their opinion this way or another? Like if I suddenly see a position appear out of nowhere that's huge somewhere, and it happened with Goog, I think from Friday to Monday or from Thursday to Friday last week, suddenly there was a huge interest in the 500 level, and here we are, $20 away from it. So
sometimes somebody might know something too.
Right, exactly. But other times it might be somebody protecting a long position. So you see a huge position in the put, you think, oh, bearish. No, it's actually bullish because that's somebody that's not willing to sell their profits yet, but they buy puts instead to protect themselves. So,
speaking of Goog,
I
was going to say, speaking of Goog, that actually is approaching its support level here too. I mean, if you look at the Goog, I don't know which one you want to look at, GOOG, 520 is major support for it. If you look at the Goog L, I guess you could say 540 is the coinciding level with it there. What are your thoughts here? First of all, which one do you trade, the Goog or the Goog L? And then what are your thoughts on it?
I trade the Goog L. I used to trade the Goog until they did that funky thing a few weeks ago. Made it a little difficult to close a couple of trades for a little bit. So either case you look at, you can interpret the formations as bullish or bearish if it's a triangle this way or that way. My interpretation is we have so many bounces on a floorboard in the Goog around the 520, 521. Right, we did it in the last, I think, since April. We did it quite a few times.
Yeah.
And you ask yourself at this point, is the floorboard going to break, or is it going to be a springboard to attack higher? Well, I tell you, everything we look at right now and everything you ask me, I'm going to tell you it's market dependent when it doesn't have Google-centric issues. I don't see any new issues for Google that are Google-centric to worry me about Google. So if it was Google all by itself, I'd say, well, if they sell it down to 500, I'm definitely going to go along it. But what are the markets going to do in general? I mean, look at yesterday's candles; were hideous, and everybody. And Google should be less susceptible to those wishes down. I would think that money would flow out of, say, the IBD and the high flyers before or faster than it flows out of staple like Google and Apple and such. But you never know. Every once in a while, they treat Google like a momentum stock and they sell it 3% in one day, and they've done it. But at this point, I'm not committing anything long term for anybody because I need a little more visibility to what's going to go on with the macro. I mean, I have beef with a whole bunch of stuff that are being said on the news, like the default of Greece, like they're going to be in default. No, pardon me, in arrears. Didn't they go in arrears on June 5th when they decided not to make those 3 payments? There were 3 payments due starting June 5th, and they didn't make them. They were in arrears then, in my opinion. So now it's official. They're in arrears because they're not going to make the payment today. And the Greek situation is awful. And yes, it doesn't affect directly, like money impacts here and there, but there's a lot of money on the line there. And the Greeks have all the aces. They don't need anything. If somebody says, oh, they need the money. They need the money to repay the people they owe debt. So if they don't have money and they have a ton of debt, or they don't have money and they have no debt, which is better? I would say it's going to be a hard vote to say yes to the referendum instead of the no vote. They're going to be very tempted to fight until the end as far as getting their debt cut. And I'm not sure that they don't have the right to do that this time around, because if you lent somebody money when you know they need it, it's hard money loans, basically, you know you're getting into a risky situation. So you can't be saying, oh, where's my entire batch of money? It was a risky situation. You got compensated. And that's the risk now. It faces you. And so don't be surprised if the person that borrowed money from you doesn't want to pay you fully. Or can't.
I want to ask you a question. Why does Google get such a free pass here? They have missed in 6 out of the last 7 quarters, and by a decent margin. I mean, last quarter they were 688 versus 731, and then they were 635 versus 637, 608 versus. I mean, wouldn't any other stock on Wall Street just be getting tarred and feathered? Why does Google get a free pass?
I don't know, where do you see free pass? I mean, last time they reported, they went from 580 to
It's been in a
540.
trading range. I mean, it's been in a trading range. You think 6 out of 7 quarters missing on the street? I mean, come on.
They print money, and their stock price hasn't gone anywhere in the last 2 years. After the jump on October 2013, they've been in a trading range, up, down, up, down, up, down. I mean, I don't know why Google would be any less worthy than any high flyer that hasn't delivered any money even in a long time. They print cash. They are a money-making machine. They are the leader in what they do. And until somebody challenges that, really takes that away from them, they will continue to do that. I mean, that's my take on Google.
I'm just looking here just at earnings estimates for next year, and it's upwards. The high estimate is actually up at $34.94. So when you consider, I don't know if that's possible or not. Lower estimates on down $29. So it's supposed to make in 2016, it's supposed to make between $29 and $34 a share, analyst estimates. You start taking that on a multiple, you only have 15, 16, which is actually less than the S&P.
All right.
So from a valuation perspective, it's pretty attractive.
I think it's worth the money. I mean, it's up there with Apple with regards to how reliably it generates profits and cash. And they do some crazy stuff, but it's little drops in the bucket with regards to what they can do. And they do some exciting things. I mean, people talk about Tesla innovation. Who's got the car that drives itself on the street today? Not Tesla. Google, which doesn't do cars. So it's just impressive what they do, and I think as a company, it deserves the respect it gets, and it's not like it's getting valuations that are astronomical out here.
Before we let you go, we got to get your thoughts on Apple itself. The stock went down to support there yesterday. It's bouncing off it here this morning. It's up $1 with the overall market here. First, what's the open interest look like for this week, and what are your overall thoughts on Apple? Are we still stuck in this Apple trading range?
Well, first of all, on Apple, people, if it's the least of my worries with regards to companies in our markets, because it's actually like that's the company to invest in, right? It has a beautiful future, huge cash, blah, 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 money-making machine, and huge fanatics behind it. Open interest has, I've said it since last Friday, it had a magnet at 125 and resistance starting at 127, actually 126. So the area of 124 to 127 is where they want to be. It has support down to 123 maybe, and smaller support down to 118 if we need it for this week. We only will need it if the markets continue on down because some debacle in the Greek situation. But I will go long Apple on a big sell-off, provided that the global thesis doesn't change. And so far, by the way, ladies and gentlemen, the global thesis has not budged. It's still the same, absolutely the same. So there's no reason to sell Apple for Apple's sake. If you want to protect longs in Apple because the markets might fall, then maybe some put spreads there will help you out.
We've been on the line with Nic Chahine. He's an options expert. He's also the author of Create Income with Option Spreads. Nic, great input as always. We'll keep an eye on this market. I tend to agree with you here. These gains here could be short-lived. Thanks a lot, Nic. We'll speak to you again next Tuesday.